Good evening. It's about 5 minutes until FOMC red folder event kicks up, and at the moment I was supposed to go live, but I'm not able to go live on YouTube, so I'll have to basically live record the event and not really live stream. So one thing I want to mention, one thing I want to see is I would like to see this daily candlestick close bullish. So I still don't want us to trade below this buy side imbalance, and I'm aware that we may actually get to this order block, or we may have already created the low of the week and may just continue seeing higher prices from here. So let's go down to the hourly. You can see that from midnight we spiked up to clear the equal highs, as I mentioned on my video, and then continued falling off from there, taking out sell side liquidity all the way till Thursday. So we haven't yet taken out last week Thursday's sell side, but we have taken out for the whole week, and now trading well below discount price. Of course, the euro is the opposite. I was still paying attention to this low resistant liquidity run. I wanted to see us break lower and continue lower during FOMC, but we obviously did the same thing, clearing the highs, completely failed this inefficiency from Thursday's price action and targeting Thursday's highs as well. But I'm still looking for this sell side liquidity to be tapped into, if not today then tomorrow. The pound being the weakest, being the weaker of the two, hasn't taken out Friday's high. Thursday, it's not close to taking out Thursday's high. We can see Thursday over there. It's not close to taking out Thursday's high like euro is. But with CPI coming out in the morning, we did see a massive drop into a deep discount, but since then been pushing higher and higher. So let's see what they have for us during CPI. So I'm going to switch to the 15 minutes chart, and I'm going to do a split screen with S&P 500, because the two that I was focusing on is the pound, and I wanted to see S&P fall off even more. So, but of course I told you all that I wanted to only sell from this area. So let's see if we can get a quick liquidity injection to this level and follow from there. So that makes it 50 seconds until the reports are out. Fifteen seconds. And we immediately start purging sell side liquidity as the first direction. From here, I expect them to now take out buy side liquidity without going too far down. Of course, this was very much expected, but one thing I've learned from ICT is that usually the initial direction is the correct direction. So I would like to see if they want to take out buy side liquidity one more time and then see the real fall off from there. The euro, on the other hand, is doing the same thing. We are basically back to London's peak time, because this was 5 a.m. and let's switch back to GBP. Still watching price fall off one direction without retracement or the typical whiplash. But of course, as we do traditionally, we wait for 30 minutes after FOMC to determine the direction. And taking a quick look at the dollar index, we are trading back into the daily buy-side imbalance. So as I said, I would like to see this candlestick for today close bullish or above this buy-side imbalance. I do not want to see a closure below this level, this area I mean. So let's watch and see how they continue printing price. Let's head over back to GBP. So everything is falling off exactly as expected, especially if you watched my previous videos. Throughout the week I've been expecting lower prices and they're all playing out accordingly. Looking at the Nasdaq, we just filled the daily volume imbalance perfectly. Well, one more time, because we tapped into it yesterday, but we tapped into it again just now. And the currencies are just melting off as expected. Okay, I'll resume the recording in a little bit. Just want to not make this too long. But I'm looking for this sell side liquidity on the pound. I believe we'll still have a continuation to the downside until the end of the week. So probably on Friday we'll get a TGIF set up. But besides that, I don't expect any upside from here. Let's move over to the 5 minutes charts. If we are going to use the 2022 model, we have clearly swept buy side liquidity at this point, and well, we swept AM sessions high, and we also have our market structure shift at that low, which is also at midnight price. So I'm watching this inefficiency. If I want to be more specific, I would be saying the last down close candle, acting as a bearish breaker. I'd like to see if we can trade into it and support, act as resistance for lower prices. So we've officially created the fair value gap from this candlestick's low to this candlestick's high, and being 14:10 to 10 p.m. this is technically the silver bullet CB. Sell side imbalance. Well, the first one that I can see created on a 5-minute chart. Going down to a 1-minute chart, we can see that already we have one here that's being respected at the moment, but I prefer 5 minutes just because of the event. Of course, the same applies for the indices, but I don't expect us to trade back into this area. I feel it's a bit too far, and we may just create a lower one to trade lower, but we will see. We will see how price trades. Looking at the Nasdaq, we have the exact same structure, and let's take a quick look at the euro. The euro has traded back to midnight price, almost took out the swing low from London session opening, the target that I would have had in mind, but not quite there. But I know we're definitely sweeping those lows now. So I'll be watching it closely. We may trade back into this because of the inversion fair value gap residing there from New York AM session. We may trade back into that before falling off, but I don't know if we'll trade all the way back up there. So I want to see how we trade, how we move from here. For some reason, YM didn't actually make so much of a dramatic move as much as I thought it would have. We basically slowly grinded from midnight without actually dipping down into discount and traded higher and higher. And I was taking a look at that and how it was so different compared to the other indices, to the other two sisters. But we pushed lower as well, just haven't traded into the midnight price. So technically the Dow right now is the strongest of the three, and NQ being the second strongest, while ES is the weakest of the three because we have traded well below the midnight price. I mean, also here we technically have, so I guess I'm not sure what the difference in price between here and yesterday's low, comparing it to here and yesterday's low. But NAS might be the weaker one on the 5-minute chart, but I still know from a 1-hour chart that we have a weaker E-mini S&P 500. Going back to the pound, I think I'll pause it here and continue the recording later. So, quick update. S&P 500 has tapped into the silver bullet CB from this area to there. Since it's wide, I would say look at the consequent encroachment, which is this point here, 4493.75. I'll be looking at this consequent encroachment to possibly hold for further downside. And on GBP USD, we also just tapped into it, but I would not be looking for the consequent encroachment of the whole thing. I'll be looking at the midnight price to hold price lower. So this midnight price with this breaker, which is essentially a failed order block, has multiple confluences for me to say I think this level will hold for lower prices. But of course, anywhere inside of the sell side imbalance is valid for an entry for silver bullet. So technically this is what ICT would have said: an entry there with your stop loss at the candlestick that started the candlestick that started the fair value gap, targeting the next sell side liquidity, in this case, which is over there. So technically this would have been the silver bullet setup for me, and then of course at this point I may not take out 100% of the position. I may decide to take out 70% and watch to see if we can have this sell side liquidity purged from London opening. So this would have been the setup. I'm just going to leave this here and see how we close the rest of the day. Of course, the same goes for S&P. We've already tapped inside of the CB. Stop loss at the third candlestick that started the CB, and take profit at the swing low. So this would have been the trade setup for silver bullet on my part, for me looking at it, because I'm combining the 2022 model and silver bullet with the time being 2 minutes to half past. So let's watch and see how this plays out. So we have somewhat surprisingly filled up the sell side imbalance on S&P 500. Our theoretical stop loss would not have been hit yet, and of course ours on the pound definitely would not have been hit yet. I believe we also got to the consequent encroachment of this sell side imbalance at that halfway point. I'm still watching to see how we trade going into the going to market on close. There's volatility, clearly volatility injection right now, and I think we almost stopped out. Our theoretical stop loss, remember, is at this high. So let's set an alert on it. Going to the dollar index, I still would prefer to see us close on the daily above or not below this buy side imbalance. Okay, we just about to take that high. We created equal highs, so definitely going to get purged. But yeah, I still don't want to see us take close below this sell side, this buy side imbalance. Going to the 1 hour, we can see an almost perfect rejection from the midnight price. The yellow line is the midnight price. So the dollar index traded all the way to the midnight price and decided to reject, but I'm still interested to see how the daily closes, and I believe we're going to close above this midnight price, but of course we'll see how that goes. We just created equal highs on ES, on S&P, with this high and this high. So if I was in this trade, I would have been squeezing my stop loss right now. My stop loss would no longer be there. I would have probably moved it way closer or completely closed the trade, because when we create equal highs like this, we're probably going to engineer more liquidity to push this high. Because looking at the top there, we can see this high is 4500, and then looking at this high, it's 4500 at this number. So 4500 and 4500, that's not random. That's too perfect for me. So I would definitely be looking to close my trade here at almost break even, or a small loss, if I was in the trade, of course. Let's go back to the pound. On the pound, we're still holding, and the euro is mimicking the dollar index at the moment, but we're still looking to see how the daily closes. We did not respect this inversion fair value gap as I thought we would, or we may, but I still am very bearish because we came so close to sweeping London sell side liquidity, but we didn't, and I think they're left there intentionally for later tonight, because we still have 2 hours until the market closes. So they're either engineering liquidity to purge later tonight, or for tomorrow trading day, for tomorrow London session. Either way, we will be looking, we'll be watching and seeing how this plays out. If I was a scalper right now, I would be looking at the fact that we created yet another equal high. Looking on the top up there, we can see the high of this candle is 4500. Same with this one, and same with this one. So these are now 3 perfectly equal highs. So if I was a scalper, when we traded down into this order block, because now this becomes an order block to me, even though it's not, but on a lower time frame, like a 1 minute or 30 seconds chart, which we can actually switch to, you can see we have an inversion there, we have an order block with a market structure shift. We dip down into it, so I would have taken a scalp buy from this point, trusting that these equal highs are going to be purged without taking out this swing low. So I'd be looking, I would have been paying attention to that. So the trade opportunity would have been this, take it up there, and probably after purging that high, we're going to find ourselves trading back into the range. So probably going to be something like this, take a go above the true week opening, then finally fall off till the market closure. So we'll see how this plays out. I'm watching closely to see if we can sweep this liquidity, this buy side liquidity residing up there. Of course, if you did take this theoretical GBP trade, you'd be in profit, a little bit of profit, but basically break even. And I'm still believing that we're going to close below this low and probably even take out London's low by the end of the day. We'll still have about an hour and 20 minutes, so anything is still possible. S&P 500 is looking ripe enough to sweep buy side liquidity finally, but of course struggling to do so because we still have a bullish dollar playing out. Nasdaq at the moment looks extremely messy. We went low during FOMC and retraced all the way back and took the high one more time, making nearly perfectly equal highs with this buy side liquidity. Of course, this is a 1 minute chart, but I went down to the 1 minute chart to see what a realistic entry for a scalp would have been, and I did mention that it was gonna be inside of this fair value gap, possibly this red candlestick as an order block. I would have entered there, so I would have seen a bit of drawdown, but right now I'll be in profit. And if you hadn't closed your trade earlier, when I say that we created equal highs, at this point you could have closed your trade with break even. So it gave out the opportunity. We may also just leave these equal highs and come back for it another time, or another day, or another session. But ideally, I would have loved to see us sweep it quickly, tap into the true week opening price, and then fall off. This would have been the optimal scenario for me. But of course, price is likely to also just fall off from here. GBP on the other hand is holding off after bouncing from the midnight price, the sensitive area that I highlighted that I would have entered a sell. I'm not expecting a new high of week to be created on the pound, and I would like to see this high, this specific high, hold throughout the week. Of course, the same goes with the euro and the dollar index. I already mentioned that I want to see the dollar index close within this buy side imbalance or above it. I don't want to see a closure below the buy side imbalance on a daily chart, and I'm still paying very close attention to that level, to this area. It will be critical. And of course, I also mentioned that ideally I would have liked us to close bullish. I would like this candlestick to turn green, basically. But anything is possible, anything is likely. Looking at S&P, we would have been swept if you entered the buy entry, so I get the feeling they are probably going to leave these equal highs. But if you entered the sell position using this buy side imbalance, this sell side imbalance, you would have probably been tagged out by spreads alone, because the spreads between this and the highs is enough to take out anybody unless you put your stop loss above the high. That's the only way you would have survived, not getting tagged out. And of course, this is very heavy because of the bullish dollar. You can see how much we're retracing on the dollar. It's of course a little more visible on a 5 minutes chart. Gold is just doing typical gold thing, being heavily manipulated, a complete mess. And essentially every other every other pair is doing its own thing as well. USD/JPY is doing perfectly what the dollar index is doing. It's been falling off the whole day slowly, and finally now quickly ejecting up using this tiny fair value gap, this BC, on a 5 minutes, and then quickly rejecting higher from there. Euro GBP also looking like a mess. Euro JPY, same thing. Let's go back to the, well, let's see the Aussie that I got tapped out with, still in a premium. So this trade would have actually panned out well if your stop loss was wide enough, or if you didn't have any stop loss, with the intention of following directional buyers as opposed to current price action. So definitely would have taken profit at this point, or I mean taken partials. I know it's a 1-to-1 trade, you can see there 1.29, so it's essentially a 1-to-1 trade, but still profitable. I personally took this trade on a very small account, a very tiny account that's basically a demo to me. Over there, it was just a $35 account, so I took the trade there. And I took euro and pound. So I'm just watching it just to see how it plays out. It's not really anything big, it's just basically a demo. I just didn't layer up on US 500 as much as I wanted to. As you can see, I was only testing out there with 0.07 lots. I normally enter one lot because it's a micro account. I normally enter one lot, so I was testing, as you can see here, I was testing GBP USD with 0.1, then I normally enter 1.7, 1.7, 1.7. So I should have entered 1.7 here as well, but I wanted to see how much this would weigh, which was basically nothing, because this being a 1 hour chart and the stop loss being all the way up there, it's still only $4. So I was just testing this out, and I didn't layer up on this. So we're trading back to the midnight price, and I might actually add 0.7 to this. .7 at this point is already minus 50, minus 60. So 0.7 is actually a lot more than the currencies. So I don't think I'll be adding any more than that. I'm entering with this because we are still in the silver bullet hour. Our directional bias is still to the sell side because yes, we just swept the low, but we'll still have London's low waiting for us on the left, way on the left, and we have this other block, this bearish order block, the last bullish candle before we close lower, and it's at midnight price. So I took that as my reason to re-enter. Oh, we have swept London's low, my apologies, I mean yesterday's low, previous day low. So that's the point where I entered a little bit more. I tried the Nasdaq earlier when I was testing out a few things. So I know this video is a little bit longer, but I wanted to see how we close on the daily. Honestly, that's all I'm mainly here for. Let's go to the dollar index. I wanted to see how this candle closes. We have finally turned green. We've turned bullish, which was very favorable on my part, which is what I really wanted. Yes, I know I wanted us to trade not below this BC, but I did specifically say that I would prefer for it to be bullish at the beginning of this video. So I wanted to see how we close in this candle. Of course, I'm looking here and I'm seeing that it's 4 hours until closure. So I probably won't continue watching this until then. I'll probably just come back later and see how the daily candle closes. So I'll still be watching this, but at the same time, I'm confident that we're going to be bullish on the dollar, bearish on the indices, and bearish on foreign currencies like euro and pound. So on the pound, we actually changed colors to red. Now we have a bearish candle. Before it was massively bullish. I believe the same is true for the euro. Okay, no, the euro is still bullish because we still haven't swept London's low, which I have an alert on, but we are aggressively trading there. Looking at this massively long wick, so it'll be incredible to see us trade below the opening price of the daily candle, which is the midnight price, and then trade below it. But we'll see how it closes. So going down to the 5 minutes, we have this sell side imbalance that we just tapped into. We just tapped into it. Possible IOFED. Possible. It's 3 p.m. now, and we are finally taking our sell side on E-mini S&P 500. Euro is still dwindling after tapping into IOFED, this CB. Let's switch back to the pound. Same with the pound, we're still struggling to take out the sell side liquidity, but we do have this CB that has been already respected, which I believe is going to be used to push price lower till the end of the day. Of course, on this test account, it's doing relatively well. The balance is now 18, sitting at almost twice the account size now. I know it's only $50, but I wanted to test out FOMC, so I'm not going to be touching my own account. So even if you caught the trade late and jumped in at the midnight price like I did, using a 1 minute chart entry, you would have still caught a few pips. I mean a few handles. Actually more than a few handles. This was 10 handles. So the 10 handle ran from the midnight price to this point, and it was done under 2 candlesticks, so that's under 10 minutes. So 10 handles, 10 minutes, done for the day. Nothing needed. Michael teaches us to try and aim for 5 handles a day. If we can do that consistently, then we can shoot for anything more than that. So at the moment, everything is looking good, all is looking well, and I guess we'll give it 1 more hour for the market to close, but I believe a couple more hours for the daily candle to close. It hasn't yet reached 4 p.m. I'm still looking and playing from, I'm resuming the recording from time to time. The trade anyone would have taken from the midnight price would now be sitting at 16 handles, and I think that's good for anybody for any day. So this is impressive, and this one would have hit the take profit for silver bullet. It's not even a 1-to-1 ratio, but it didn't get close to the stop loss anyway, so profit is profit, because I remember the entry was this breaker that we took. On this account, we're sitting on $30 profit now, with the total being 68, 67. So let's see if we can take out sell side. That account is just for testing, of course, as I said already. So when we do clear this sell side liquidity, I'm probably going to finally close the trades or take out partials to continue practicing partial taking. There's no other sell side I see here on the S&P besides yesterday's low, and I'm guessing, yeah, the Nasdaq has already swept yesterday's low, because we saw on the 5 minutes chart it was the more bearish of the 3 sisters. At this point, I would actually consider taking partials out from this trade. So we'll just take out half of it, and let's move our stops to break even. Euro still hasn't cleared this sell side or any significant sell side for me to consider taking partials. Well, this was London's low. This is London's low, so we are about to take out that sell side liquidity. So maybe at that point, actually before that point, sorry, let's just break even. And the same goes for the pound. Just moves the stop losses to break even. So now we are in a riskless trade, a zero risk trade. So even if price was to reverse on any of our positions, we would be essentially breaking even. So let's watch and see how we trade going into the closure, keeping in mind this is the sell side liquidity I'm targeting, which is London's low on GBP USD, and I'm targeting yesterday's low on E-mini S&P 500. So Euro USD just swept the sell side from London session. I just got the alert now. There we go. Done. That's the first target. My next target on Euro is this sell side, residing at that point. There's too many liquidity here, which is basically Monday's low. Looking up here, Monday. So I'm targeting the low on Monday. At this low is where I may consider taking partials. As we can see, my alert is set for that level, so I'll be watching it to see how we trade. I believe we've finally set the high of the week, and there's no more that needs to be done beyond this point. Going back down to the 5 minutes, switching to pound. We've obviously hit the take profit on this trade and the second entry as well. Second entry's risk reward might be a little better if you cut this. Say you cut it at exactly this high. Your stop loss is always at the third candlestick that created the fair value gap, which in this case is this point. Alright, this third candlestick. Targeting the sell side liquidity, which is here. It's literally the same risk reward, 0.92. Again, way smaller but higher probability because we are way past FOMC and it's the silver bullet, the last silver bullet of the day, and we can clearly see and identify where the drawing liquidity is after having a market structure shift at that point. So looking at this swing low, market structure shift, it's easy to spot where price is likely to get drawn to. So that stop loss that you had all the way up there could even be moved here or the top of this CB, trusting that we won't trade above it. But if you want to be mechanical, your stop loss would be placed up here. So yeah, so let's see, we still have about 30 minutes, 40 minutes for the market to close. So we are 30 minutes away from closing, probably an hour, because we still trade a little bit after 4 p.m. and the trade plan that I highlighted here for some reason still played out and actually went as far as 1 to 2. If we clear this sell side, then it becomes a risk reward ratio of 1 to 3. So that's actually impressive. Of course, the same went for here, but not as much. On this side, we basically got a 1 to 2 at most. So entry was at this level. Stop loss was over there at the high. If we held it to here, it will be sitting at 1 to 2. And then if we finally clear the sell side, then it's 1 to 2.5. So we'll still be watching to see. And of course, I'm only going to stop this recording when the daily candle closes, so we can also review what to expect moving forward. But so far, everything is moving as planned. On this side as well, I readjusted the stop loss that was here at break even for the pound because noticing the spreads on this broker, it's extremely wide. even though it's a 15 minutes chart. You can see how big the spreads are. So holding a trade overnight, I don't want to risk the possibility of these spreads widening even more than this. So with euro, we are far enough that I don't think it would widen enough to stop me out. But with pound, we're still close to the entries, so I left both of the stop losses up there. S&P, of course, we are also far enough that the likelihood of coming back there is very slim. And we have finally taken our sell side liquidity from yesterday's low. So at this point, I can take another partial. Let's take out 1.5. So at this point our balance is now $46. Let's see if we can double this account by the closing of the day. Euro is falling off. Everything else is also falling off. So because we've already swept sell side liquidity on S&P 500, I'll be taking the last partial. So I'll now be leaving this till market on close. Actually, this I'm just going to leave it until Friday, New York opening time. When New York opens, I'll be terminating the trades completely, or possibly leaving it for next week. But at this point, I don't consider these active trades anymore. I'm still waiting for this sell side liquidity to be purged. The moment it is purged, or in the next 15 minutes without getting purged, I'm going to remove the partials I need to remove from this side as well. And lastly, the pound, I'm still waiting to see if we can clear London's low, or it's either London's low or time at 10 p.m. my time, which is 4 p.m. New York local time. So I'm paying attention to those two factors for me to determine whether I'll be closing or leaving it to run. Okay, so this is the last update of the day. I will obviously continue in a few hours, but because the broker that I'm trading with will be cutting off soon in the next 2 minutes, I am basically forced to take the partials I need to take and conclude this video, well, this portion of the video where I basically live traded FOMC, if you would call it that. So I'm going to take my partials now, then we'll see how the daily candle closes on the dollar index after. Well, probably going to be a few seconds for you guys, but it's going to be a couple hours for me. So let's go back to the MetaTrader. On euro, since I still find euro to be the stronger of the two, and euro is the only one that has taken out sell side on a weekly chart, I am going to I'm going to leave that one exactly as it is. Then I'm going to remove one lot from this lower one, while on the pound, I'm finally going to move the stops to break even because we are low enough. So let's squeeze it. I still don't feel comfortable putting this stop loss here because of this sell side imbalance residing here. So I'm going to leave the stop loss here just for now. But I will take partials on this of 0.7 and the other one of 0.7. So we have exactly one lot. So I want to have more of the pound because on a weekly chart we haven't swept the sell side yet. Well, reasons that I've given already on my previous videos. So that's all for the PM session, as the broker closes as well and everything shuts down. We are still close to taking London's low on GU. Finally, as the market has closed, we eventually swept sell side liquidity by a few pips on GBP USD, and on Nasdaq and the indices as a whole, we just continued melting off and only now just consolidated. The most critical thing I wanted to pay attention, I wanted to see, was the dollar index on the daily, and exactly as I predicted, exactly as I wanted, the two things I wanted to see. I wanted to see if we could close bullish, and I wanted to see, I didn't want us to close below this daily buy side imbalance. So I'm looking at this now and expecting higher prices from here. Going to the 4 hour, I'll be looking to see if this order block, specifically this area, can support higher prices tomorrow. If this doesn't support, with the way we expanded from making an the week low to all the way to the week high, I get the feeling we may not drop that low, and we could drop anywhere here, probably in this tiny fair value gap. I am picking this tiny one because it's the top of the daily BC, of the daily buy side imbalance. So I get the feeling we'll just tap on the top of the buy side imbalance and then continue to move higher from there to this buy side liquidity at 105.883. So this is what I'm looking for going into tomorrow. Anywhere inside of this imbalance, then we'll start moving higher.